Hi there, welcome back to ET Now. Very good morning. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all that's been happening across the globe and also tell you about the domestic cues that you must watch out for and also take you through all of the stocks that you must keep on your radar today. So let's get started with an eye on the globe and see how the US markets have fared. Now, the Wall Street, all of the stocks over there mostly ended higher, with S&P 500 actually logging its third straight winning session. They were supported by renewed strength in mega cap, tech and broader market rally. If we talk about individual stocks, Nvidia jumped about 1.5%, whereas Micron and Oracle, they also advanced, helping lift the sentiment across Wall Street. Market breadth, that was also strong, with at least 10 out of 11 sectors finishing in the green yesterday. Materials and financials, they actually led the gains in terms of sectors. Now, shares of Newmont and Freeport, McMoran, all of these surged nearly 3% as gold and silver futures, they also climbed to their record high levels. If we talk about indices, the Dow Jones Industrial Average, that added more than 200 points or about 0.5%, whereas the Nasdaq Composite, that also rose about 0.5%, reflecting steady momentum in both cyclical as well as technology stocks. Now, looking ahead, trading volumes may thin out as the New York Stock Exchange closes early tomorrow, that is on Wednesday for Christmas Eve, and remains shut on Thursday for Christmas Day. So, Srishti, that's how the markets have fared. Looks like, that Santa rally has begun.
Indeed, Kanishka, and not just the equity markets, even there has been a good move in the commodity market as well, because look at the move in the gold as well as silver prices. There's no stopping at all, because gold for today is now inching higher and trading above that 4,500 per dollar mark. That's 4,502 is where gold is seen to be trading at right now. And along with that, when it comes to the silver prices, that is also inching higher. 1% uptick as we speak right now, and it's trading above that $69 per ounce mark. But along with that, when it comes to the commodity as well as the crude oil prices, with respect to what's been happening in Venezuela, we have seen a bit of an uptick when it comes to the crude oil prices. Brent crude is up around 2% as we speak right now and hovering around that $62 per barrel mark. So yes, good run across the commodity board is what we are seeing.
Absolutely. Looks like a good run across the commodity board as well. But let's get you some top global stories that we are tracking this morning. And first up, China has slapped tariffs of up to 42.7% on European Union dairy products, alleging that EU subsidies have damaged its domestic industry. Now, the duties effective December 23rd have hit fresh, processed and blue cheeses. Now, Brussels has called the move unjustified and unwarranted as well, and says that it will respond to Beijing. Now, this action follows earlier shifts in pork duties, underlining rising trade friction between China as well as the EU.
And Trump says the U.S. will keep crude oil and tankers seized near Venezuela, stepping up the pressure on President Nicolas Maduro. And after ordering a blockade of the sanctions this week, this has definitely pushed the prices higher, and the escalation is in the standoff.
That's right. Moving on, the Trump administration has halted the coastal Virginia offshore wind project. That's the largest in the U.S. and paused leases for 4 other East Coast wind farms as well. That's citing national security concerns that were flagged by the Pentagon. Now, this move deals a major blow to offshore wind, with projects meant to power over 2 million homes now in limbo. Now, Dominion Energy, which leads the Virginia project, saw its share slide nearly 4% on the news.
And Novo Nordisk has won US FDA approval. Definitely for the US FDA approval is what we are getting to see, as FDA clears the Novo Nordisk first weight loss pill, and pill expands the potential patent base significantly.
Moving on, now tech billionaire Larry Ellison has stepped with a personal $40 billion guarantee to back Paramount Skydance's hostile $108 billion bid for Warner Bros. Discovery. Now, the move aims to counter the claim that the offer lacks full financing after it agreed to sell key assets to Netflix for a value of about $83 billion.
And despite concern of a growing valuation bubble, 2025 has been a defining year in the AI evolution, from large-scale integration across the industries to the massification of the AI with ChatGPT's Gibble trends. This year, we have seen it all. Well, almost. Meanwhile, consumer tech saw disruptions in the form of the ultra-thin smartphones, a comeback of the compact devices, and surge in the AI-powered wearables. But 2020, even as the three major tech firms hit $4 trillion in market cap for the first time ever. Let me take it across to Shibani, who joins in with a lowdown of the world of tech that shaped up in 2025.
Well, 2025 was an exciting year for tech, which was primarily defined by the continued boom and simultaneous growing pains of artificial intelligence. Well, first up, AI boom. Now, AI actually saw full-scale integration across industries, from moving to simply experiential stages to full-scale integration across industries, with focus on, in fact, autonomous AI, agentic AI capabilities. Now, tech giants such as AWS announced new AI agents for coding, security, and DevOps tasks. In fact, not just the enterprises, there was a widespread adoption of tools such as ChatGPT, Gemini, and Copilot by everyday users for improving individual productivity within businesses too. Also, there was a big AI infra push that we saw. If you can see that, in fact, AI infrastructure data center investment saw a boom. Approximately $61 billion of investment in AI data centers was invested worldwide in 2025 to meet the immense power and infrastructure demands of AI, highlighting a massive area of capital expenditure and growth. AI infrastructure and future of energy also saw a big spotlight this year. The immense energy demands of AI data centers brought nuclear power and other clean energy solutions to the forefront. Now, moving on to the consumer tech innovations. Now, this year saw, in fact, notable product releases and trends in consumer electronics. First up, the ultra-thin phones came into the big picture. iPhone launched its first iPhone Air, and Samsung Galaxy S25 Edge saw a launch this year, both flagship phones in terms of design, also prioritizing the slim profiles and form factor without compromising the performance. Then the compact phones made a big comeback this year, moving away from big screens and heavy devices. They were a passé this year. Third, Samsung teased its first tri-fold device also this year. Now, AI-powered wearables such as the Ray-Ban Meta glasses brought hands-free, context-aware visual assistance into the mainstream, while Apple introduced AirPods Pro 3, in fact, which you could actually use to monitor your heart rate and health. Spatial computing also, after the launch of Apple's 2024 Vision Pro, sparked a new wave of AR and VR devices this year. In fact, a lot of focus was also on cybersecurity and digital trust. The cybersecurity landscape grew more complex, with AI used by both attackers as well as defenders. The need for secure, trustworthy AI and methods to identify AI-generated content became a big priority and was one of the critical issues. Then, three tech companies hit the $4 trillion market capitalization, and finally these three companies surpassed that $4 trillion mark, or the $4 trillion milestone. It was Nvidia, Microsoft, and of course Apple, as you can see on the screen. Nvidia was in fact the first to cross the threshold, driven by immense demand for its AI chips, and has since gone on to become the world's first $5 trillion company. Now, Microsoft and Apple followed the suit only recently with their growth fueled by cloud services, Azure, and strong product sales, especially in Apple's case with iPhone 17 series respectively. But there were a lot of missteps that were seen in the tech fraternity, in the tech industry as well. Massive layoffs was one of them. Over 1 lakh tech jobs were cut across major firms and companies. They restructured to focus on AI and operational efficiency. Intel, Microsoft, Meta, Amazon and others, in fact, made thousands of job cuts, creating significant workforce disruption. AI agents and bot malfunctions were also there this year. This year was, in fact, a very public AI blunders were seen, including an AI agent from Replit that went rogue and deleted the entire client database. Meta's, in fact, live demo failed during a global presentation, and Grok XAI's chatbot, which produced anti-Semitic rants and other unhinged responses this year as well. So overall, it was a mixed bag. Integration across agentic AI, in fact, capable of performing complex tasks and everything was seen. But then there was also a lot of failures on the tech front that 2025 saw.
All right, so that was all about 2025, the year of AI revolution. But with that, time now for a very short break. We'll be right back and to tell you how the Asia Pacific markets have opened up. With me, Kanishka Sarkar and Srishti Sharma, and time now to take a look at how the Asia Pacific markets have opened up. And it's a rather positive day coming in for the Asia Pacific markets as well. Mixed, but yes, mostly on the positive side. If you talk about Japan's Nikkei, that's trading about 0.2% higher, 50,487 is where it's trading. Hong Kong Hang Seng Index, that has also opened up in the green, just up about 0.15%, 25,840. That's the level that it's holding on to. Shanghai too, China's Shanghai Index, that's also trading in the green, absolutely flat moves, but yes, managing to hold on to the green. 3920 is where the index is at. So yes, good moves coming in. If we talk about ASX 200, Australia's index, that's also trading higher, up about 0.6%, 8750. That's the level that it's holding on to. So yes, that's about the indices. South Korea's Kospi, that's also trading pretty much in the green, up about 0.5% right now, 4,124. That's the level that where it is trading. So yes, good moves as far as the Asian indices are concerned. But if you talk about the Nifty, it was a rather good day, good start to the week that we saw yesterday. We ended at the 26,172 level. So yes, very good moves yesterday is what we saw. But if you talk about today, Nifty implied open suggests a start yet again in the green, tracking all the positive cues that we are tracking in terms of global cues. So yes, 50 points of uptick at the start is what we are penciling in as of now. So yes, Srishti, looks like a good day coming in for the Indian markets as well.
All right, let's watch out for that. But just yesterday as well, we have seen very good moves coming in on the benchmark indices. Even the broader markets participated very smartly. But let me take it across to Snehi to understand the big movers in trade yesterday. Snehi, take it away.
Well, yes, all in all, a very good day of trade coming in for the market. Started strong with solid gains, and over the course of the day, we only continued to build onto those gains. Nifty ended around that 26,170 mark, slightly north of that, with a very good uptick coming in, about 0.8% higher. You had good moves coming in for the Sensex as well. Yes, the Nifty Bank slightly underperformed the benchmarks, but nonetheless a very good move coming in on the banking index as well. The entire banking and financial pack was doing well, and Shriram Finance was one of the top contributors to that. North of a 4% uptick coming in on that stock on the back of the MUFG 20% stake buying happening in Shriram Finance in the press conference, wherein they said that the company has no plans of becoming a bank right now. But yes, this stake purchase from MUFG in Shriram Finance is a big key positive coming in for that company. A bunch of other companies did well, but on the flip side, the stock that was under pressure was Tata Consumer from the Nifty 50 group of stocks. Very nominal cuts coming in, but nonetheless, good move coming in on that. A couple of life insurance names like HDFC Life, SBI Life were also under slight nominal pressure, but nothing much to worry about because the broader end of the market, the breadth across the market was very cheerful, and the Nifty mid cap and small cap both outperformed the benchmark, but the real exuberance came from the Nifty small cap space. Very strong move coming over there. Sectorally, it was the day of the IT stocks. Persistent systems continued to do well, as did a bunch of large cap IT names like Infosys and Wipro. Some of the top Nifty gainers as well on the back of the spike up in ADRs that we saw over the weekend with settled, but it was sentimentally positive for those stocks, and both of them closed north of 2% with gains of north of 2%, so looking good for both Infosys and Wipro as well. Other than that, the entire defense pack, railway pack, the shipbuilding group of stocks, Cochin, Mascot Dogs, Garden Reach, they did well. The railway names like Jupiter Wagons was up 20%. On the flip side, from the broader end of the market, Misho, 10% lower circuit on that stock after seeing back-to-back solid days coming in over the last week in the liquidity short squeeze, and seems like there has been a profit taking to a very large extent on Misho, and that is the reason why the stock was lower by about 10%. All in all, the breadth of the market was rather cheerful. Some stocks were in focus on the back of news flow, but other than that, there was common optimism in the market. All eyes are going to be on how the market now trends and plays out on the day of the weekly Nifty expiry, and immediately after that, it's the monthly Sensex expiry, because given Thursday is a holiday, these two expiries are going to be playing out back to back. So we'll just have to wait and watch and see that the strong start on Monday that we've seen, if that continues for the rest of the week or not.
All right, so rather good day that we saw for the markets yesterday. And today as well, we're penciling in a positive start for the D-Street. But which are the stocks that are going to be on the move? Rabinder is here with that list. Rabinder, over to you. Good morning.
Well, as cement stocks like Ambuja, ACC and Orient Cement can be in focus, where ACC and Orient Cement will be amalgamated with Ambuja Cement, and Ambuja will issue shares to public shareholders and cancel shares it already holds, and swap ratio will be that 328 Ambuja share for every 100 ACC shares, and 33 Ambuja shares for every 100 Orient Cement shares. So back of this cement stock can be in focus. Prestige Estate can be in focus, where company has acquired a 25 land parcel in Chennai with approximately top line revenue potential of approximately 5,000 crore, and company has also acquired Ramco Cement non-core assets worth of rupees 515 crore. HFCL can be in focus, where company has opened a QIP to raise funds from the institutional investor, fixing a floor price at rupees 65.84 per share, with a final issue price to be decided based on the demand. GPT Infra Project can be in focus on the back of their order win, where company has declared L1 bidder for the order worth rupees 670 crore from a National Highway Authority of India for construction of 4-lane road in Jodhpur. And lastly, Satwik Green Energy can be in focus, where company's arm Satwik Solar has got order of rupees 486 crore for supply of solar PV modules. So back of this, Satwik Energy can be in focus.
So lots of stocks to track today, and firstly let's talk about some of the stocks that are going to be in focus on the back of order wins. And firstly, there is Antony Waste. Now its arm has bagged an order worth 329 crore rupees, or nearly 330 crore rupees for that matter. It's a 10-year DBOT contract from Thane Municipal Corporation for 600 to 800 TPD mixed solid waste plant. So yes, a big order win coming for Antony Waste, 330 crores nearly. So the stock of the company is going to be in focus, and we'll watch out for how it reacts. Next up, Ola Electric is going to be in focus yet again, because the company's management has come out with a statement saying that the one-time share sale proceeds that were done recently, they've been used to repay debt. So we'll wait for how the stock reacts to this announcement. Next up, let's talk about IIFL Finance. Now for this one, the company's board has approved NCDs on a private placement basis. It's a base issue size is going to be of 200 crore rupees, and that could be expandable to about 700 crore rupees. Now this separate perpetual NCD tranche of up to 100 crore rupees will also be there. So yes, on the back of this development, IIFL Finance is going to be in focus yet again. Next up, Man Industries. This is going to be in focus on the back of a negative news flow here. The management has confirmed that the Income Tax Department did conclude searches across its business operations at its premises, and however business operations they continue to remain uninterrupted. So yes, let's see how the stock reacts to this development, given that the company has already said that the business operations they remain unaffected despite the IT searches that took place at their premises. So yes, that's Man Industries for you. And lastly, there is Coforge, which is going to be in focus because the company's board that's expected to mull fundraising on 26. So yes, watching out on all of these stocks. And lastly, there's also Sangvi Movers. This one is going to be in focus because it's renewable energy arm that has secured a large EPC wind BOP order that's worth nearly 429 crore rupees. Now, these orders are from multiple IPPs for a period between FY26 to 28. So yes, big order win coming for Sangvi Movers as well. And we'll wait for how the stock reacts to this.
All right, let's watch out for all these stocks to be kept on radar for today. But along with that, let's also tell you which are some of the cues that you should be watching out for. Let me take it across to Snehi for all the details.
Well, yes, lots of cues to watch out for very closely. Back home, we are going to have the weekly Nifty expiry to watch out for, and some market volatility could be in room for us because it's the Nifty expiry, the weekly Nifty expiry, and also the fact that we've started the week quite strong. Let's see if there is any profit taking or not, and if the expiry pressure comes into play. Other than that, globally from the US, the GDP numbers along with industrial production and consumer confidence are going to be important to watch out for. Watch out for that GDP number. It has been delayed on the back of the government shutdown, which is now opened up, but still watch out for any commentary around that as well. In terms of corporate action and board meetings back home, Granules board is going to be in focus. That stock has been in focus on the back of back-to-back news flows, but also the board is going to be mulling fundraising via preferential issue. So on the back of this, watch out for the stock of Granules as well. KSH International IPO, this is going to be making its D-Street debut, and that's the activity that we are going to be seeing from the primary end of the market. Lastly, lock-in period is going to be ending for the recently listed IPOs like Satwik Green Energy, wherein 2% equity comes out of lock-in, and GK Energy, the 2% equity coming out of lock-in for this one as well. So watch out for all of these cues very closely.
All right, so that's all about the cues that we must watch out for. But now time to put the spotlight on some macros. Now, India's 8 core infrastructure sectors, they've recorded a growth of about 1.8% in the month of November. That's compared to the year ago period, supported by higher production of cement, steel, fertilizers and coal as well. That's according to the official data that was released yesterday. My colleague Ankur Mishra is here with all of the details.
Yes, now the core sector data has been released, and it is important because 40% of the weightage in IIP comes from that. And now as far as these core sector is concerned, 4 of them have shown increase in this particular month where it is up. Of course, the growth is supported by higher cement, steel, fertilizer and growth output. If you compare with the last November YOY, cement output has risen to 14.5% this month, followed by steel production, which is up 6.1%, and fertilizer output is also up 5.6%. Similarly, coal production has also seen an increase of around 2%. But where is the decline coming from? The decline is coming from crude oil production, which has declined 3.2%. Similarly, natural gas output has fallen 2.5% this month, and petroleum refinery output is also down 0.9%, and also electricity generation has seen a decline of 2.2% YOY. All in all, the output sector is still in positive territory at 1.8%. Now it will be interesting to see whether or not same trend is followed in IIP numbers.
All right, thank you so much, Ankur, for getting us all those details. But let's focus on the EV sector because Vietnam automaker VinFast is expanding its footprint in India. The company recently set up manufacturing unit in India. So what are the company's goals, and can India become the next EV manufacturing hub? To discuss this and more, we have Pam Sun Chow, who is the CEO of VinFast Asia and VinFast Asia. Let's go across and listen into this conversation.
We would like to export that from India very much because that is the reason why we have chosen Tuticorin, because of the proximity to the seaport, to the airport. So we hope that we will be able to do that very soon. But at the moment, since the demand from the Indian market is so high, so we need to satisfy the domestic market first. At the moment, we have already some order from the neighboring countries like Nepal, Bangladesh, Sri Lanka, and even interestingly, we also have the order from Africa, from right-hand drive African countries, and some also order big numbers. But we are not able to do that at the moment because we need to satisfy the domestic market in India.
All right, so that's about the auto sector, but let's shift focus to budget 2026. And sources are telling ET now that the government is likely to increase subsidy amount under its solar scheme. Now, PM Surya Ghar Muft Bijli Yojana. Now, sources also added that the overall budgetary allocations for the renewable sector may also rise. My colleague Prakash Priyadarshi is here with all of the exclusive details.
Well, we are learning from our sources that the government is likely to increase subsidy amount under solar scheme for faster adoption in the upcoming budget for the financial year 2027. Very significant development coming in. Sources indicate that the subsidy amount under PM Surya Ghar Muft Bijli Yojana likely to be increased for up to 2 kilowatt solar system installation, which is likely to be increased to 40,000 rupees per kilowatt from existing rupees 30,000 per kilowatt. A very significant development coming in. You are aware that the under this scheme, government provides rupees 18,000 per kilowatt subsidy between 2 kilowatt to 3 kilowatt solar installation, and above 3 kilowatt subsidy amount has been capped at rupees 78,000. Now, there is a proposal to increase subsidy amount up to 2 kilowatt capacity installation for faster adoption. You are aware that the government is planning to achieve 10 million solar installation target by financial year 2027 under this scheme. At this point of time, approx 1.6 million solar installation has been completed. Therefore, additional subsidy amount has been proposed to speed up the overall installation going forward. Along with that, sources also indicate that the small hydro policy may be announced in the budget to support small hydro projects up to 25 megawatt capacity. By providing additional financial support to such projects, government is trying to provide impetus to approx 16,000 megawatt capacity of small hydro projects going forward. And therefore, additional financial support likely to be provided such projects. Along with that, the overall Ministry of New and Renewable Energy has sent this proposal, and overall budgetary allocation for renewable sector may be increased beyond rupees 26,500 crores.
And as we step closer to the new year, we have some of the biggest deals in the financial sector, with one of the latest being Shriram Finance and MUFG deal. Mithali is here with a roundup. Take it away, Mithali.
Right, so India's financial sector is actually witnessing an unprecedented move by the foreign investors. And also in 2025 alone, we saw a whopping 1.5 lakh, or more than that actually, 1.5 lakh crores of investments by the foreign investors in the Indian BFSI sector, signaling strong long-term conviction in the India's credit growth story. The recent one, of course, the Shriram Finance and the MUFG deal that was announced, where MUFG is going to acquire a 20% stake in Shriram Finance. That was the biggest one for this year, and actually the largest ever investment made in the BFSI sector for the Indian markets. Now, the deal size was around 40,000 crores, but there were more other deals that were actually bigger, like the MUFG and Shriram Finance. Let's have a look at the couple of them. So it was RBL Bank and the Emirates NBD. The size was around 27,000 odd crores, and after the announcement, we also saw that the stock actually did not give much of the returns to the investors. If we talk about the Samman Capital IHC deal, that was around 8,850 odd crores, and post then the stock has actually declined by 15%. Yes Bank and SVMC deal was also on the line in 2025 with a deal size of around 16,000 crores, and after that the stock has surged nearly 3%. 19%. If you talk about the IDFC First Bank and the Warburg and ADIA deal, the size of that deal was around 7,500 crores and the stock moved actually 35% post the announcement of that deal. Also, we had the Federal Bank and the Blackstone deal. The size of the deal was around 6,200 odd crores, and post the deal, the announcement, the stock actually surged around 19%. Now, if we talk about the valuations, from that perspective, Shriram Finance, the deal valuation was around 1.9x, but post that, we have seen that the stock's price to book valuation as of now stands at 2.9x. That means a re-rating has been awarded by the market to the stock. If you look at the IDFC First Bank, it moved from 1.5 times to 1.6 times post the deal. RBL Bank saw a modest uptick from 1.1x to 1.2x as of now, while Federal Bank's valuation, it remained static at 1.9 times. While these upticks that we have observed, there were also deratings that the stocks faced, like Sammaan Capital. The company's price to book value, it actually derated from 0.9x to 0.5x, and also Yes Bank, the post SBMC infusion, it trades around 1.4 times its price to book value. So with consolidation gaining pace, we actually have seen that FIIs have a kind of remains bullish on the India's BFSI sector.
All right, so that's a roundup from the BFSI sector. But moving on, in an exclusive chat with ET Now, Shriram Finance's Executive Vice Chair Umesh Revankar breaks down the rationale behind the MUFG deal, explains their growth roadmap, and says that they expect return ratio to improve going forward and also borrowing costs to come down. Let's take a look.
I believe the ROA will go up to 3.4 to 3.5 level from 2.8 level. So that is the kind of improvement we can see in ROA. Basically, what we are looking at is, because of the strong balance sheet, our borrowing cost to come down, because our ability to manage the borrowing much better. We are targeting a 20% growth on overall AUM. Yes. Definitely, we feel that there is a lot of opportunity, especially on the commercial vehicle and passenger vehicle. If you look at, after the steep increase in the prices because of the Bharat Stage 6 implementation, many people have postponed buying or upgrading the vehicle, especially in the commercial vehicle. I feel all this upgradation will happen and people will start buying, and that will really help us to grow faster.
And 2025 brought sweeping income tax cuts, making earnings up to 12 lakh tax-free, while GST 2.0 simplified taxation into just 5% and 18% slabs. Now, corporate India stayed in focus with major boardroom battles, SEBI scrutiny, and high-profile insolvency cases. Big-ticket IPOs like Lenskart grabbed the headlines with steep valuations amid global pressure, including the steep US tariffs. Voices like Zoho's Sridhar Vembu pushed for the digital self-reliance. But overall, the reforms, resilience, and reform-driven growth defined this year. Take a look on Special Report.
2025 began with a sigh of relief for the common man. Finance Minister Nirmala Sitharaman rewrote the income tax rulebook. The rebate was hiked, effectively making income up to 12 lakh rupees tax-free. Then came GST 2.0 in September, simplifying the clutter into just two main slabs, 5% and 18%. Essentials like life insurance became tax-free and household goods dropped to the 5% bracket.
So, we have corrected inverted duty structure problems. We've resolved classification-related issues, and we've ensured that there will be stability and predictability about the GST. Rate rationalization, of course. We've reduced the slabs. There shall be only two slabs, and we are addressing also the issues of compensation cess.
While domestic policy soothed nerves, global cues rattled them. For months, Indian traders started their mornings glued to Donald Trump's Truth Social feed. The anxiety peaked in August when the US president slapped a staggering 50% tariff on India. Markets wobbled but didn't break. Despite the tariff wall, Indian exporters pivoted, and by November, exports actually rebounded by 19%.
I don't think we have. I've been very disappointed that India would be buying so much oil, as you know, from Russia. And I let them know that. We put a very big tariff on India, 50% tariff, very high tariff.
Back home, a quiet storm brewed at Bombay House. Noel Tata, in his first year leading Tata Trusts, drew a hard line. In October, long-time trustee Mehli Mistry failed to secure a reappointment, ending an era of the old guard. It was a development that signaled Noel Tata is not just filling a chair, he is reshaping the legacy. But not all legacies survived. The Jaggi brothers, Anmol and Puneet, saw their green energy empire Gensol implode. A damning SEBI order in April accused them of treating the company like a personal piggy bank, diverting funds for luxury real estate and golf memberships. By May, lenders had dragged the once celebrated EV pioneers to insolvency court.
We are working hard to improve our rating, and like I mentioned that in the next 2 quarters time, we will expect that our rating will go up. We will be very true to all our lenders, and we will be very conservative in our assessments, and we will be making all our repayments on time. And this equity raise and divestments will help us to do it. So we will be on track to becoming and regaining whatever we have lost in the last few days.
From insolvency to insane valuations, Lenskart's Piyush Bansal, known for grilling founders on Shark Tank, faced the heat himself in November. His company's IPO listed at a dizzying 230 times earnings. Social media was ruthless, calling it hypocrisy. Bansal, however, remained unfazed, insisting the premium was for future vision, not present profits.
From giving vision to India to giving vision from India to the world. Somewhere in that journey, India was changing, and so were we. Lenskart was born out of that dream, that India can build institutions, just like Microsoft did, not just startups. To solve a billion people problem was not a small goal.
While Bansal pitched value, Zoho's Sridhar Vembu pitched values. As geopolitics turned ugly, Vembu became the voice of digital Swadeshi. He warned that global tech like GPUs is being weaponized, urging the government to adopt Indian-made tools like Aratai for national security.
The first priority right now is to make the app world-class and make sure that tens of crores of users can use it every single day without any glitch and with in a very smooth, slick user experience. That's the current goal right now.
From tax cuts that put money in pockets to tariffs that threaten to take it away, 2025 was a year of resilience. As we head into 2026, India Inc. looks stronger, battle-hardened by the storms of the last 12 months.
Indeed, so that was a wrap that how 2025 has panned out, which big corporate announcements as well as which are the other economic related announcements that have been made so far. But with this, viewers, it's time now to look into a very short break. Don't go anywhere, we'll be right back on the other side.
In association with Bank of Baroda, play the master stroke with Bank of Baroda.
Consolidation that's expected to be completed over the next year. Ashesha is here to take us through more details.
Well, yes, big news coming in for the cement sector, especially for Adani Group cement companies, where ACC and Orient Cement will now be amalgamated into Ambuja Cement, which means all cement companies of Adani Group will be housed under one company, and that is Ambuja Cement. Companies will issue shares to public shareholders of both ACC and Orient Cement. Shares held by Ambuja will be cancelled, because of which promoter shareholding in both these companies is likely to fall. All assets, arms and liabilities
will be transferred from ACC and Orient to Ambuja Cement. So this is how the entire transaction is structured. We'll also talk about the swap in just a bit. Promoter shareholding, as I mentioned, is likely to fall. It is likely to come in at about 61% versus 67%. Currently, Sanghi and Penna merger is under process. That is likely to be completed soon. And the entire amalgamation between ACC, Orient and Ambuja is likely to be completed over the next 12 months. Now, the company says that merger will create a pan-India cement powerhouse because this was the main objective of amalgamating the two companies, and they aim for single consolidated one cement platform. And this also simplifies the entire structure because both all the three companies which Adani Group has for its cement business will now be housed under one company itself. The company also says that it will optimize on the synergies and also on the logistics network that it currently has, and this will also help them improve their margins by at least 100 rupees per ton. And remember, all these cement companies have in any case been focusing on margin expansion, and this will also help the company in aiding their margins. Now, as far as the operational benefits are concerned, it will streamline their entire corporate structure, it will strengthen their balance sheet position, and it will lead to efficient allocation, capital allocation for all of these group companies. So these are the three primary benefits that the company is focusing on. Now, this also means that there will only be two major players in the cement industry. One is UltraTech Cement, which is the leader in the industry as of now. It is aiming to reach a capacity of 155 MTPA by FY28, and Ambuja, meanwhile, has given a target of 213 by FY27. So that's the roadmap that these companies are working with. Let's also talk about a couple of other parameters and what this means for the existing shareholders of Orient Cement and what this means for ACC shareholders. Now, if you look at the valuation, there is no gain or loss for ACC shareholders as of now basis the swap ratio they've come up with. But as far as Orient Cement is concerned, they stand to benefit, and this is to the tune of about 9 to 10%. So yes, Orient Cement is likely to benefit, and shareholders of Orient Cement are likely to benefit on account of this, although there is no gain or loss for ACC shareholders. So yes, big deal coming in for the cement sector, and the entire space is likely to be in focus on the back of this.
All right, thank you so much, Ashesha, for getting us all those details. So let's watch out for the cement pact to be in action today. But moving on to another story, and the central government has finalized the framework for the new EV policy. This is set to be rolled out in the next financial year. Let me take it across to Charu, who is here with more details.
The Delhi Chief Minister Rekha Gupta recently, as per several media reports, spoke about the upcoming EV policy. Now, this policy is going to be rolling out in the year 2026, and a lot is left to be decided. However, as per the information that is available with us, there are going to be three important areas where we are going to be looking at with this new policy. First of all, it is going to be about building the infrastructure at neighborhood level to have more charging stations within the state. Apart from that, there will be a lot of subsidies that will be given out, so that the third thing, the prices are maintained at a level that is optimal for the middle class, so that there is no gap between the prices in a way that the middle class cannot afford these vehicles in the first place. Now, Delhi had an earlier EV policy in the year 2020 which expired in the year 2023. After that, some extensions were given. However, finalizations to have a new updated policy were undergoing. Some discussions are still left. However, developments are expected to roll out the policy in the year 2026.
All right, so that's all about the new EV policy. But moving on, as we draw closer to 2025 end, which are the stocks to keep on your radar for maximum returns and the stocks to avoid losses in 2026, Ravinder is here with an entire analysis of the recommendations.
Well, as in the year 2025, Nifty has delivered a return of approximately 10% in 2025 so far. But if we look at some of the stocks from the Nifty 50 index, where analysts are expecting a high and the low return. Firstly, let's start with Nifty 50 from the Nifty 50 space. In Nifty 50 space, Eternal is leading with the expected return from the for the next 12 months for the Eternal is more than 33%, which is followed by Adani Enterprise with 32% and Trend with 29%. And it is followed by NTPC and ICICI Bank with 26, 29 and 26% respectively. And on the downside, if we look at the stocks that are analysts are expecting a less return, first is Wipro, and the expected return is downside by 2%, which is followed by Hindalco and Tech Mahindra. And on the Eicher Motor, then Eicher Motor is expected to remain largely flat with a marginal return of 0.1%. Now shifting focus from Nifty 50 index to Nifty Bank index, then in the year 2025, Nifty Bank has delivered a return of 16%, has outperformed Nifty 50 index. And from the Nifty Bank index, ICICI Bank is expected to lead with a return of more than 25.5% over the next 12 months, which is followed by HDFC Bank, Axis Bank, Kotak Mahindra Bank and SBI. And SBI is expected to deliver a return of more than 10% over the next 12 months. Among the laggards, IndusInd Bank is expected to decline by more than 10%, which is followed by AU Small Finance Bank, Federal Bank, IDFC First Bank, while Canara Bank is expected to deliver a modest positive return of more than 1.5%. Now shifting focus from Nifty 50 index, Nifty Bank index to Nifty mid cap index, and from the mid cap space, Kalyan Jewellers is expected to outperform with a return of more than 41% over the next 12 months in the 2026, which is followed by Suzlon Energy at 40%, Hudco at approximately 40%, and Tube Investment of India with 37%. And Vodafone Idea is expected to fall by more than 25% over the next 12 months, which is RVNL is expected to decline by 15.7%. And lastly, if we talk about from the small cap index, then in 2025, Nifty small cap is underperformed all the broader indices, where Nifty small cap was down more than 7.5% in the 2025. And from the small cap space, AB Realty is projected to lead with a return of more than 53% over the next 12 months, which is followed by Whirlpool of India 51%. Whirlpool of India was down 51% in this year on the back of the promoter stake sale. And Welspun Corp is expected to deliver a return of more than 50% over the next 12 months. While meanwhile, Lotus Lab is expected to decline by more than 12% over the next 12 months, which is followed by Anand Rathi Wealth, Manappuram Finance, Encon International, and MCX by 2%.
All right, so that's about the top gainers and laggards in 2025 and what to watch out for as far as 2026 is concerned. But moving on, a quick look at how the Asia Pacific markets have settled in, and it's a rather good day coming in for the markets, tracking those positive cues from the Wall Street, especially for Japan's Nikkei. That's up about 0.2%, 50,490. That's the level that it's holding on to, very close to 50,500. So let's see whether or not it is able to scale that level. Hong Kong's Hang Seng, that's also trading up about 0.4%, 25,900. That's the level that it's holding on to. Very good moves over there as well. China's Shanghai Index, that's also trading pretty well, just about 0.2% higher, 3,920. That's the level that it is holding on to. So very good moves as far as the Asia Pacific markets are concerned. Some of the other indices, Australia's ASX 200, that's actually trading even higher. That's up nearly 1% right now, 8,780. That's the level where it's trading. So yes, good moves over there as well. South Korea's Kospi Index, that's also trading pretty well, up about 0.5% right now, trading above that 4,100 mark. So yes, that's a key level for Kospi. So trading very well over there as well. Now let's talk about the Nifty. So yesterday we did manage to close above that 26,170 level. So very good moves as far as the Nifty is concerned. And today also we're expecting the start in the positive territory, not very significantly higher, but yes, good moves. 66 points of uptick is what we are penciling in as of now for D Street, for Nifty at the start of this session today. So yes, very good moves likely. Srishti, the Nifty is up about 10% for the year. So looks like we're going to end in the positive territory for the month as well. And it's likely going to be a good year for the Indian markets as well.
Absolutely, Kanishka. Let's watch out for that and hope the same. But with this, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team. Thank you so much for tuning in.